Tomorrow, tomorrow, I love you. Tomorrow, you're only a day away.
Now that song has nothing to do with today's podcast, other than the fact that I sung that in my Com 101 class in Auburn and incorrectly thought that that movie came out in my year of birth. And now after looking it up on Google,
Fact check,
I realized wrong again.
Well, it's never too late to be wrong. That's what I've learned from you, Russ. But today's podcast unveils things like this, along with many other movie references that nobody else knows. And we love learning that about you, Russ.
Well, I think today's podcast, you're going to get the top 3 reasons why our coaches believe infinite banking is why they are pursuing it, or that why they love infinite banking, or why that they use dividend paying whole life insurance as a way to implement the infinite banking concept. And along the way, we have some more laughs. I hope we didn't hurt your eardrums. Let's belly up.
Welcome to the Wealth Without Wall Street podcast, your guide to understanding how to get out of the Wall Street rat race and start your own mailbox money lifestyle. Now, don't let these handsome Southern draws fool you. These financial minds are teaching our country to enhance savings, increase cash flow, and create passive income, all without the help of Wall Street. Are you ready to break through? Now here are your hosts, Russ Morgan and Joey Murray.
Welcome into the IBC Roundtable, where each week we go deep into your favorite subject, the infinite banking concept. I'm joined by the host and co-host of the Wealth Without Wall Street podcast, Mr. Joey, the Italian Stallion Murray. What's up, Joey?
Happy New Year, brother.
Good to see you. Same beard?
Same beard, different year.
All right. Sounds good. Across the table from me, I've got the man that I refer to as the Indiana Jones of finance, the man that goes deep into your finances, looking for gold, looking for treasures, Mr. Downtown Ernie Brown. What's up, Ernie?
Hey, Russ. Man, it's so good to be with you guys. Not in person, but excited to see you.
I think we should have a third nickname to add to Ernie in 2021.
I'll come up with a new one. Just give me time. But moving on to our resident pilot, the man between two ferns, the Gooch, Mark Cargucci. What's up, Mark?
Not much. Happy New Year, everybody.
Yeah, glad to have you in. And how's it in the Northwest today?
You know, we had a little bit of sunshine this morning, and I finally, after being up here more and more, I realized why when the sun comes out, like people come out of the woodwork and just like dive for sunshine.
When you say come out when the sun comes out, it makes me think of the Annie song, Tomorrow. Do you want a little piece of that, Joey?
I'll pass. I thought you were going to go Suns Out, Guns Out, and I'm grateful that you didn't do either of those.
Just real quick tip before we go to JD, the Com 101, we had to tell a little bit about ourselves. The movie Annie came out the year I was born. And so then I did that song as part of my kind of introducing myself to my, 50-person class. I sung a little piece of it incorrectly.
Wow.
And out of tune. Why'd you look at me so weird?
I knew the out of tune part, but I didn't realize
you just looked at me so weird though. You're like, you didn't believe that Annie came out then?
I could have sworn that was out in the 60s or something.
No.
I didn't realize how old you were.
I thought you were talking about the modern one or something. All right. The man with the $1 million smile, Mr. Incredible, Mr. JD Hill. What's up, JD?
Hey, Feliz Año Nuevo. I'm practicing my Spanish. That means Happy New Year.
You must have had carnitas for lunch.
I did not, but man, that sounds delicious.
All right. Well, let's get to today's subject. What are we talking about today, Stallion?
I think each of us have our own take on why somebody should consider infinite banking. Like the top reason that you have one, why you got into infinite banking. Maybe JD has a different idea. I think we should go around the horn on this.
I don't know if this as much is about why we got into it, but I would say definitely if someone asked me, what is my number one reason behind implementing the infinite banking concept. I love to talk about it from a business owner's perspective, right?
Okay.
Being kind of that serial entrepreneur, I love the part in the book that talks about EVA, economic value added. And if you think about this, this is where we think about how the value of our cash has to be accounted for. Otherwise, we can make bad deals. And I'll go deeper into that in a second, but I want to hear from you guys. So, Joey, what would you say is your number one reason?
I love the fact that, I'm an efficiency guy, right? Like, if I could ever multitask, it would be a really cool thing. I can't because I'm a dude, but I would love for my dollars to be multitasking. And infinite banking allows us to do that, right? $1 is doing multiple jobs. So some people would say, would you rather buy one of something, or would you rather buy one, get one free? Like, that's the way I would introduce this concept. And as we know, do we want to go into depth here? Like what?
No, we'll come back to it.
All right.
But
We'll come back. Okay.
Everybody knows you're about efficiency. There's no other way around that $7 haircut.
That's a fact, Jack.
Dude, you get in and out of great clips.
A man that goes to great clips
hurry.
is about efficiency, right?
Thank you. Yep. Use the app. Okay.
Yeah, no doubt. We'll come back to you on that one. All right, JD, tell me what's your number one reason?
I'm very similar, I think, to Joey here. I'm a Star Wars fan, and so if you remember the movie The Clone Wars, right? For me, it's very similar to that. It's the fact that it's kind of like you can clone your dollar, right? If I can have a dollar doing one thing in the policy and doing one thing somewhere else, right? I've effectively cloned that dollar, and I'm able to do multiple jobs with less resource, basically. And that, to me, I think is super powerful.
So you went Star Wars on that. I would have went Michael Keaton Multiplicity or something.
Okay.
Again, most people have never seen any movie Russ mentions, and JD goes with the popular one. Thank you.
Yeah, the only Michael Keaton I know of is Batman.
Exactly.
That's it.
Speaking of Batman, for those who can see, you can't see.
We can't see. Yeah, we gotta go the other way.
I cannot admit or deny that I could be Batman.
Or that your leg needs some sun.
Exactly. With my Batman socks on today. All right, Ernie, what's your number one reason to do infinite banking?
I'm probably thinking more abstractly. My number one reason is freedom. And what's concrete about freedom is that when we implement IBC and we use these whole life policies, we give ourselves control over a large amount of cash, right? And when we get control over a large amount of cash, it gives us the ability to think creatively. So there's an element of creativity that I think leads us into more freedom. And when I think about that, do you guys know of any financial advisor who's given advice for their clients first to keep access and control to their cash? And then once they do that, invest in things that they own and control?
Not a chance.
Maybe I'll meet him tomorrow, but no.
Yeah. So I love that this gives us freedom, I think, number one.
Freedom. Mark, what's your number one reason?
Mine was going to be autonomy. I like to be the one that's in control. I'm not being pushed or pulled by external forces. I don't have to beg the bank, try to convince them, show them paperwork and like that. If we're doing movies here, Fortress of Solitude. Superman gets to pull the knowledge crystal and he puts in whichever one he wants to learn. So that's how I view the infinite banking concept is I'm the one who's in the driver's seat and I get control.
Nice. Love it. All right. So let's go back. I'm going to bring mine back up. I want you guys to tell me what you like or you don't like about my number one. And we kind of I feel like this is a chance for us to hold up why we believe ours is the best idea. And I'm going to get to go first.
Of course. I'm going to go ahead and jump in before you do that and say EVA was one of the hardest things for me to understand when I read the book first. Like it just went way over my head.
Why?
I don't know. To me, it just was one of the, other things were much simpler and more concrete, like the for instance, the two sisters buying cars, that to me was really easy. It's in my face, the numbers, I guess. But EVA is about numbers, but for the concept to me was just foggy.
So the concept of economic value added is that our money has a cost and we have to account for it. And here's how I see it play out in business owners' lives, is that we stack cash, and we may call that retained earnings, but we're putting this money, we're building it up in our business checking accounts. And when we want to make a financial decision in the business, whether that's to hire a new employee, buy a new piece of equipment, expand, whatever it is, a lot of times we will look over to that checking account, see that it has enough money to do whatever it is that we want to do, and we do it. And that's a really poor way of making a financial decision, because we don't know if that is going to be a good deal or a bad deal. Why do you think that that's the case based upon EVA and what you know about it, Joey?
Well, I think what you're pointing to is that people don't value cash, or at least their own cash, the way they do somebody else's. And that's what I think eventually made sense about this, is that you're going to pay for the access to somebody else's cash.
But how does it help you avoid being a bad deal?
Because then you have an actual cost to associate with that particular investment or expense or whatever it may be.
So if I was going to spend $50,000, I had to go to the bank on a 3-year note, pay them, $20,000 a year to have access to their 50, right? And so I was going to have whatever that math is,
$1,666 per month,
$1,600 month payment. If I can't create cash flow that exceeds that, it tells me it's a bad deal. I used to see this happen in the dental world all the time, where they'd go buy x-ray machines because they were excited about it, and they go, oh, I've got the cash, and this is going to produce, $1,500 a month. And I was like, yeah, but it's going to cost you $2,100 a month. It didn't cost me anything. I paid cash for it. No, but if you would have gotten a loan, it would have cost you $2,100 a month. It's a bad deal for you.
I guess what you're saying, Russ, and I think this is what we talk about a lot on the show, is you have to have a framework to make decisions by. And what EVA does is it gives you that framework.
It creates an absolute idea of how to assign a value to my cash. And here's another thing it does to you. It makes you pay for your dental work even when your wife's a dentist.
I know what you mean. What do you mean, Russ?
Well,
tell everybody
when I understood that concept, my wife, Megan, was a dentist that had her own dental practice. I realized that she didn't create that business to give me free dental work. And it was going to cost money regardless if I paid or not. And so I needed to have paid her so that those dollars could do more things. Otherwise, she was going to have to do several procedures to make up for mine for lost cost.
You're talking about stealing the peas.
I'm talking about stealing the peas, but I'm talking about EVA. There is a cost to our dollars, and we have to assign that cost.
Okay, so you're done talking now.
Are you saying mic drop that mine's number one? We don't even need to go to this. We can talk about what your number two is.
We gotta continue on here. Okay. We can't just stay on EVA the whole time. Okay. I've heard enough about infinite banking. I'm pretty sure it's a fit for me and my family, Russ. How do I get started?
Let's take that pretty sure and make it darn sure. Reason you do that is that you get clarity, Joe. You need to get on a 15-minute call with one of our coaches at wealthwithoutwallstreet.com/free call.
Then you'll know where you're starting from and where you're headed. And only then can you implement the infinite banking process.
All right. So go to wealthwithoutwallstreet.com/free call to get that 15-minute conversation, gain clarity. But now let's jump back into today's episode. All right. I'm going to jump back over to JD. I don't want to listen to you anymore right now. All right. Defend your point. Why does the Clone Wars, and the benefits of those dollars being cloned, why should that be someone's number one reason to do infinite banking?
I mean, have you seen the movie Clone Wars? Right. I mean,
I probably have not.
Oh, okay. You're a Michael Keaton fan, obviously. So the thing about it to me, and the way that I've articulated this to other people, is basically in order to effectively accomplish what you can do with IBC, you would have to have double the money. Right. So in other words, if I were going to have $1 earning a rate of return, even if it's a 1%, it doesn't matter, right? But if I were going to have $1 earning a rate of return in a checking account, and then I also wanted to use that dollar to now earn a rate of return, say in a business or in a real estate transaction, I could not do that right? With only $1. I'd have to do that with $2, right? I'd have to have $1 deposited in my checking account. And then I'd have to have $1 working inside the real estate transaction or the business venture. So it would require $2. But with IBC, I can effectively do that with $1, right? Because once I put the dollar inside the policy first, right, I can effectively clone that dollar, if you will. And now I can also go put that inside the real estate transaction.
And you think that that's better than EVA?
Hands down.
Hey, have you seen the Clone Wars? Yes.
Answer is no. Multiplicity. Mr. Mom.
Which real quick.
Batman.
There is no try, only do.
That's right. Thank you, Yoda. Just out of curiosity, EVA, is that similar to lost opportunity costs?
Well, it allows you to understand what lost opportunity cost is. And in the book, when Nelson describes it, he basically showed some of the major business, Coca-Cola, Briggs & Stratton, CSX Railroad. He was identifying how that management structure went into those businesses. And when they implemented EVA within their businesses, their stock price went dramatically up. And it's because they stopped making bad deals and they started being able to assign the right cost. Have you guys listened to the intro to one of the most recent podcasts we did, the one with Stephen Wessner on the marketing? If you listen to that intro and how you have to assign the right the right price to things, it helps your product be more profitable. So
Russ is really proud of that.
I really love that. All right, Mark, tell me why autonomy is number one over Clone Wars or EVA.
All right. So let me just ask you this question. If you weren't in control, if you didn't have complete direction, even if you could justify through EVA, even if you did have the clones, if you had to go to someone else to get authority to do that, how much control did you have? And I'm just going to stop right there.
Dang.
Man.
Welcome to the Fortress of Solitude.
Don't drop that mic, Joey.
Mic drop.
Don't drop that mic, please. That's the expensive mic.
Russ, let me ask you a question. EVA, Nelson talks about in his book, Becoming Your Own Banker. Would you say he discusses that concept in the beginning, the middle, or the end section of the book?
Ooh,
Off the top of your head.
It comes, I'd say it's toward the end of the first section.
It's like medium rare.
Okay. I would say that it's in the middle. I haven't looked at it, but from what I remember, I think it's in the middle. If Nelson thought EVA was the most important concept in the infinite banking concept, would he have put it at the beginning or the middle of the book?
So are you saying the most important thing is what is said first?
Potentially. What I'm thinking, and by the way, I love EVA. I love it so much. I made it number 2. But what sticks out to me in terms of freedom is the picture of the average American family that Nelson talks about in the beginning of his book. And the main point there is how many points of interest is the American family sending away from them? In other words, how much of their cash flow are they out of control of? And if they were able to recapture that direction of cash, they would have freedom. That's why I think number 1 for me has got to be freedom. If you don't have freedom, there's no way you can be considering EVA.
Okay.
All I can think about is Braveheart right now.
That was strong. All right, let's hear yours, my bearded friend.
Well, to be honest, I feel like I've been convinced here.
Yeah, EVA.
I feel like if I go against Nelson, I lose. So I think Ernie just trumped me. I mean, I can't even fight that battle. JD, you're on your own.
All right. So here's it. Let's if it's all right, I want to bounce, because this is if you're listening to this conversation and you don't even know what the crap we're talking about, you're like, why are you guys fighting over Clone Wars and multiplicity? We're talking about a concept called infinite banking, which is the use of dividend paying life insurance to finance the things of our life, right? Infinite banking is that process. the tool most often used to perform that function is what?
Whole life insurance.
A dividend paying whole
Yeah.
life insurance with a mutual life insurance carrier, right?
That's right. I thought you just said that. I'm sorry.
No, I didn't say that. But,
Okay.
But thank you for not listening. So I want to talk about why, or what would be the number one reason why you would recommend to use whole life as a part of the infinite banking concept. So since you didn't decide to participate in the last discussion, Joey, we'll let you get your point out first so we can go ahead and squash it and talk about somebody else's being better.
This one's easy. Okay. Access. We've already been talking about freedom, right? And I think I would continue on. Whole life insurance gives you access to your money which without it, none of this is possible, right? None of the freedom that we would be looking for is possible. And I would ask you very simply, what was if you disagree with this, then you have to compare it to what, right? I'm going to compare it to like someone investing in a 401k, for instance. And I would say, what was the last investment that came across your desk that you were able to take advantage of out of your 401k funds?
I had a 401k for a very short period of time. I don't have one now. So I would say I didn't ever do
Okay,
that.
I'm asking you, as you're driving down the road, you're listening to this, that's what I would ask you is, what was the last investment you were just super excited about? Maybe it's a rental house, maybe it's a multifamily, whatever it may be, that you were able to take advantage of through the funds in your 401k. And that would tell you how important the access to your money is.
Okay, so I see where you're going there, but if I was to debate you a little bit on this, Joey, which I'm going to, I like to, it's my gift.
I would not expect anything less.
Is what do you consider whole life insurance an investment?
No.
But you just compared it to an investment.
I am considering the characteristic of being able to access it or not. And 401ks, IRAs, things of that nature, lock your money up.
Well, let's just say you flipped over your mattress. You could access the money pretty quickly there too, right? Why would you choose a whole life policy over access to your mattress if access was the most important thing to you?
Because then access is available to other people like thieves, robbers.
Well, you just got into access.
house.
Like you didn't say that. You didn't say protection. You said access. Good try.
All right. What's
Good
yours
try.
then?
JD, go ahead. Tell us what yours is.
I don't know if I like where this is going now. I didn't realize this was going to turn into, no, I like this. This is really good. Mine would be safety. Right. And so think about it from this perspective. Why do banks invest billions of dollars a year into cash value life insurance? Is it because it's risky or because it's safe?
Because it's a scam.
That's right. It's a Ponzi scheme. Right?
Because they got duped, man.
They didn't take Dave's advice. No, I think because it's safe, right? If you think about it from the perspective of, what are we actually comparing it to, which is a checking or savings account, right? This isn't the investment. This is where I put my money before I make the investment. Is the fact that it's for all the characteristics and reasons why I like having a checking or savings account is because it's safe, right? I know that my money's going to be there. I get that same safety, but can it actually get more inside of an insurance policy?
Okay, you got to expound upon that, because not everyone listening would agree that you get more safety in an insurance company than you would a bank.
Let's start here. How much is FDIC insurance? Like, what does that insure my accounts up to?
What is it? Is it 250,000?
250. And inside of a policy, how much is my basically cash value? So what is that guaranteed up to?
Contractually, it's guaranteed 100%.
That's right. So it's not limited, right, by $250,000. It's only limited by my ability to be able to put funds into it. And so from a safety standpoint, I don't think it gets any safer than that. And let me take it a step further. If you look at even what percentage of liquidity does FDIC have in terms of how much they're insuring, it's like maybe 1 or 2%. Well, in order for an insurance company to have an A+ rating, right? They have to have, from my understanding, dollar for dollar in reserves for what they have out in risk.
Okay, I see where you're going there. It's much better than Joey's
Come on.
access argument. I like access to money, but I mean, he needed to back it up a little stronger. How about you, Ern? What's your number one reason for using whole life insurance? You got one you want to share with us?
Yeah, I like Joey's. I
Thank
like
you.
JD's a little bit more. He says safety. I say security. We're talking about whole life insurance. Whole life insurance to do what is as the basis of where we store large amounts of cash. So when we evaluate that, just like the banks do, tier one capital, we got to find what is the best place for us to store cash that provides the best protection, that's safe, the most utility, and the best return. That's got to be a factor of it. And we put all that together. I haven't found anything better than dividend paying whole life insurance.
Dude, you're adding like several characteristics. You can only do one. This is not fair. The rules have changed.
He wanted to throw a couple extra in there. He also knew the title of our show was the top 3 reasons, so he wanted to make sure they got a couple in there
Hey.
to be more accurate. All right, Mark, let's see what you got. What's your number one whole life reason?
So, since I can't squeeze multiple things in, I'll just use multi-tool. So if I think of my whole life policy as like a multi-tool, right? What do you know of that can mitigate your risk for potentially passing away prematurely, that you can leverage against, that can also create tax shelter opportunities for you? You can also then generate, generational wealth for people downrange. I mean, if we're going to look at something that can, a hammer is great when you got nails, but it's really hard to wash a window with a hammer. So it's really not necessarily useful in that respect. But if I can take whole life and take all these little things that it does, combine them together, now I've got the multi-tool. So I'm going to go with Gerber.
I really feel like I got a raw deal on this.
All right, Jude,
2 back to back.
let me ask you a question. What financial tool do you own that is guaranteed to grow each year?
You're asking me?
I'm asking you as the general public.
Okay. John Q. Public.
Mm-hmm.
I'm coming up blank there.
My number one reason why I love to use whole life insurance as the tool inside of the infinite banking concept is that my cash value is guaranteed to grow every single year. Guaranteed.
I mean, that's good.
No, it's not good. It's great. Think about this, Joey. When you consider what compounding interest does for our money every single year, like all this stuff you guys said, I agree 100%, Mark. I love the fact that I can multi-purpose it. I love that it's safe. I love that I can access it.
Thank you.
But the fact that it gets greater and greater every single year, I have a policy, the very first policy I bought, it's almost 11 years old in a few days from now. This year, its guaranteed growth is going to be almost 2.5 times what I contributed to it this year.
That's solid.
What did I have to do to get that? I just had to start it in motion. It's like the trees. If you ever cut a tree open and you look at it, you're going to see these rings, and those rings represent years of growth.
That's true.
Just like a tree, my whole life policy is guaranteed to grow until I die, unless I decide to cut it down, and I'm not going to do that.
I sure hope not.
All right. So did you guys decide on me winning that one too?
I don't know that anybody is going to be able to compete with you, Russ. Like, I think you're going to win by default because
I control the mic more than anybody else. Nobody's willing to talk as much as I am.
But it's not about us winning. At the end of the day, if you're listening to this and you haven't started on this path of infinite banking, hopefully you got more and more information today that would say, okay, I got to get started. How can somebody get started on this, Russ?
How can you start? Well, the first thing I would tell you to do is go to wealthwithoutwallstreet.com/free call. Jump on a 15-minute call with one of our coaches here to ask those questions, right? Ask, how does this apply to you? And more importantly, what is it that you're trying to accomplish, and why is that important? If you'd love to go even deeper than that, I'd encourage you to join the Inner Circle. Go to wealthwithoutwallstreet.com/inner circle, and you can join this live discussion, because that's where we're getting ready to go right now. We want to open up this, be more Q&A. Hopefully somebody in there is going to tell us who won, because I know the competitiveness in the five of us want to say that we won, but we're going to let an independent third party join that. So if you want to be able to ask live questions and be a part of this discussion every week, join the Inner Circle. So gentlemen, I don't know if we covered every single point that we could have covered. We didn't give each one of our top three, but we gave more than 3 answers. So if you don't have enough reasons why you should be using infinite banking and whole life insurance, set up a 15-minute call and ask more questions of these coaches. We'd love to hear from you. As always, thank you for listening to this podcast, and have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand, so that your wealth will never run dry. See you next episode.